Welcome back to Winning on Taxes. I feel like I just turned a fire hose on you with all this information about being payment compliant. It really is the second half of compliance. And these are terms that IRS uses. So if you learn the language that they're using, you'll know what they mean and what's most important. To start your case, first of all, get caught up on your tax returns because that's going to take a lot longer. One, to get the returns prepared, and then two, for the IRS or state to process them. It can take 6 to 9 months for older returns. So that's why you want to get on that quicker. But as soon as you're financially able to, start making those payments. Change your withholdings. Talk to a tax preparer to know how much you need to be paying and estimate tax payments. Now, they're only required quarterly, but if you can pay them monthly, if that works better for your budget, just so you don't have to deal with this. I mean, the interest rate you're going to save by not paying them over a month, 30 days or 60 days is minuscule today. So again, if it works for you to pay monthly, just get it out of your hair, get that money out, and that way you'll be ahead and you can plan for the future. And once you get used to that, you can include that as a cost of business or in your monthly budget and plan accordingly. You might need a second job. You might need a better job. You might need to ask for a raise. Whatever it be, plan for long-term success. So once you're making those estimated tax payments and you're on top of it, then you can look back at the back taxes and say, okay, IRS, I'm not owing moving forward. I just have this chunk of money back there. Some of it might be old enough that it might be ready to expire or have already expired. If you go on a hardship status or a non-collectible status, all kinds of balances expire with time. Currently, it's a 2-year hold, at least a 2-year hold. And with time, and many people are staying it well past the 2 years, as long as their income doesn't jump up dramatically. You can set up an installment agreement either to full pay the balance or to only pay part of it. So you're entitled to pay what you can afford to pay, not what the IRS wants you to pay. And they won't tell you that very easily. You have to go through some financials, but they make it sound like it's impossible. I did one today in 20 minutes. You sit down and if you know what you're doing, it's easy. And that's just the end part of the negotiations. But doing an offer and compromise, that is another option. And all of these options open up to you by being filing compliant, payment compliant. If you're not doing those two things, doesn't matter. I mean, you can hit by levies, wage garnishments, and someone can get you temporary relief, but for long-term peace of mind, you've got to get straight with them. You've got to stop owing, and you've got to pay or file your taxes moving forward. And that's going to really give you the peace of mind and help you get in the driver's seat when it comes to your taxes. So sorry, my nose. That's the best thing for you. Avoid the interest and penalties because the interest and penalties are the worst on the newest tax returns. Within the first 6 to 9 months are when you get hit with the worst penalties. And if you're current, it saves you peace, a lot of money, and puts you in the driver's seat. So stay tuned and we'll be back for the next show.